Thanks everyone for joining us. My name's John Fishman. I'm the founder of a company called Bizydev. We're based in New York City, and we work with companies on a growth from a growth standpoint, whether it be a product, service, technology. One of the categories that I focus in is real estate, and really getting a foothold for these different companies into the real estate industry. I spent the last 15 years working in the New York City real estate business on the owner operator side. And I would say we were always at the forefront of trying to apply innovation to the industry. I met the PSFK team about 10 years ago. We actually did an experiential activation in New York City that we called the Future of Home Living. From that initial partnership, I've always been kind of an attendee at their conferences and read their reports and content. So when Pierce asked me to kind of lead a panel today on the real estate response to what's going on in the world, I reached out to some of my friends and contacts here who all were willing to make the time available to share their perspective with the larger audience. I think one of the goals today is to kind of provide some color on the state of the market, the retail market, and the challenges everyone's facing from the real estate side, but also kind of think through and talk through what the future could look like. So I'm going to ask each of the panelists to kind of introduce themselves, but we'll start with Steve Soutendijk. Why don't you give a little overview on you and kind of what you do?
Sure. Thanks, John. My name's Steve Stoutendijk. I'm an executive managing director at Cushman and Wakefield, where I've been for the last 15 years. I am a retail leasing broker, predominantly focused on landlord and tenant representation in Manhattan and in Brooklyn.
Perfect. Scott Sherman.
Hi, I'm Scott Sherman. I am the principal and co-founder of Tricera Capital. We're a retail-focused investment company based in Miami, Florida, with a real focus on Southeast U.S. and emerging kind of cities and neighborhoods where we're actively acquiring street retail and mixed-use assets.
Perfect. And Jared?
Hi. Hi, everyone. Thank you for joining us today. Jared Epstein from Aurora Capital. I am a vice president and principal at the company. I'm in my kid's room, so I find my crib. I think I'm thinking about school. We own throughout the country, primarily in Manhattan and the boroughs. We are the largest landlord in the meatpacking district and a pretty significant landlord in Soho.
Perfect. And Jared, maybe you could, I think kind of to frame the conversation, I thought it'd be good if you could give a little perspective on kind of where the market was leading up to the end of 2019 and first month of 2020.
Sure.
So that people know where we were at before we went into the new realities that we're facing.
Sure. It was a dichotomy in the retail leasing world, in my opinion. We own, like I said, we own plenty of assets in Soho and around the country. So Soho, Broadway, Wooster Street, Prince Street, Lincoln Road down in Miami, all very challenging. Rents that came down approximately 40 to 60%, depending on the corridor. Instead of having, 2 or 3 years ago, we would have a bidding war sometimes on spaces, multiple offers in. Now it's hard to even get paper. Had been hard to get paper from a tenant, and when you would receive an offer, it would be, for the most part, a short-term deal, 60 days, 90 days, maybe a 5-year deal with a kick out after 12 months. We were lucky enough to sign a few leases in those markets for 5 or 10-year deals with some nationals that all do include kickouts. We try to push them out to 6 or 7 years with significant penalties, all amortized leasing costs being commissions, free rent, TI paid back, their unamortized portion. And the trigger for all of these termination rights being based on sales. We, as I mentioned, we also own significant holdings in the meatpacking district. That area had remained as hot as a pistol. as if it was 2015. The amount of interest in our development project on Gansevoort Street and the other various properties that we own where availabilities could be made in the next year or two, we had action on nearly every space. We did complete many leases, and we still have a couple going on. And I think that's because this particular neighborhood is such a unique pocket and has restaurants that will most likely come back and thrive when this is all over. But the world has dramatically changed in a matter of 30 days. If you have time for me to talk about that, I mean, you know, I could tell you what's going on right now.
Sorry, we will definitely get there. But maybe just because your kind of coverage is more in New York, and I know West Coast and Chicago, maybe Scott could speak to what he's seeing in Florida and the Southeast right now, kind of leading up to March 1st. So 19 and beginning 20.
Yeah, so you know, the majority of our holdings are in Florida, really Miami, Fort Lauderdale, Palm Beach, and then we're on the west coast of Florida in Tampa, St. Petersburg. We have an asset in Nashville, but mostly in Florida. And so really leading up to, you know, 30 days ago, it's been, you know, everything's been kind of been moving steady along. You know, a lot of our tenants in our portfolios in these kind of emerging cities has been a lot more mom and pop, local and regional type retailers, less, you know, credit national retailers. So we've been, you know, working more in that kind of space in these markets. And there's been a lot of new, you know, a lot of momentum. I mean, leasing demand's been strong, growth's been strong, pricing's been tight. And so, you know, up until call it 30 days ago, you know, we were still actively looking to acquire and probably had 20 leases, you know, in negotiations in the pipeline across our portfolio with different types of tenants.
Perfect. And Steve, maybe from like the brokerage perspective, I know you do both landlord representation and tenant work, but maybe just speak to the types of tenant in a market like New York that you were seeing prominent in 2019.
Yeah, you know, I think Jared hit on it. It really was a different story in every different market, meatpacking, and specifically even a lot of the real estate that Aurora controls in the meatpacking district was particularly hot. There were portions of meatpacking that were a little bit slower, like 14th Street. Fifth Avenue was particularly challenged in 2019. Food and beverage drove the bulk of the leasing business. Almost 50% of all of the retail transactions that were done in New York in 2019 were food and beverage, full service restaurants, quick service, fast casual, coffee, juice, etc. And of course, we're going to talk about the impact of COVID on those businesses. It's obviously been a substantial hit. But that was who was driving the market up until March, for the most part.
Got it. So I think kind of generally speaking, the market was fairly strong and stable in 19. And obviously with everything going on right now, each one of you I know is different, dealing with different types of situations. So Jared, maybe talk about kind of how you would summarize like what you're really as a retail focused owner operator, kind of really what you're dealing with right now. And remember that a lot of the kind of PSFK panels to date, you know, have talked about innovation and creativity and, you know, kind of a lot of futuristic thought process and marketing. So I think the audience would benefit from really hearing kind of what the realities are that the real estate industry is facing right now.
A lot of people have compared what's going on today with a world war, like World War III. And that's what it feels like to me. It feels more like a historic war because we're in a sense of triage, not just our company, Aurora, but any peers that I have that I'm friends with at other large landlords, much larger than Aurora even, are all in the same state. They're manning the fort and dealing with the onslaught of calls, emails, and letters that are coming on a daily basis ever since about 2 weeks ago. it started with restaurants and gyms saying, they wouldn't be able to pay rent the next month, 2 months, 3 months, abatement, looking for an abatement. Then it metastasized into retailers looking for rent relief, kicking the rent to the back of the term with an additional, length on the term, which isn't great for a landlord because you're talking about losing present dollars of cash flow and kicking it down the road. So the net present value of the cash flow stream is much less valuable. And we're dealing with the obligations that we have, which include real estate taxes, insurance, utility bills, lender, amortization and interest on our mortgages, and in some situations, ground lease payments if we're the ground lessee. So we have to pay our own landlord, and if we don't, we're in default. So it's pretty brutal what's going on right now, and it's not just even retailers. It's now even gone further that you have office tenants that are seeking the ability not to pay rent. We're hearing, I was on a call before, that you can't really put a tenant in default at this time, let alone not being able to go through the court system and evict someone. It's I don't know the legality of it yet. I have people looking into it, but I'm told that the word default is something that can't be activated at this moment in time after non-payment.
Yeah, and obviously, everyone sees the storylines about, especially in big cities, about that we're all in this together. And I think the partnership of the landlord tenant is being put on full display. I had a conversation with Scott leading up to this conference, and I thought kind of his approach would just be maybe helpful to others out there. Scott, maybe speak to how you feel that you were either proactive or in some situations having to be reactive to the conversations and calls and emails you were receiving.
Yeah, so I mean, exactly like you said, we do feel like the tenants are our partners in a way, and frankly, they're the lifeblood of our properties. Without the tenants, we don't have empty buildings. And so about 2.5 weeks ago, when this was really just starting to escalate, we knew we were going to start to get a flood of calls from all of our tenants. And as I mentioned previously, a lot of our tenants are local, smaller tenants, not necessarily big corporate multinational type brands. And so a lot of them, it's their only store. They have a few stores, but it's really personal to them. And so we decided to proactively send out a note to our tenants and let them all know that we're going to defer April rent for our retail tenants and amortize it over the last 6 months of their lease term. And so we did that to really give all of our tenants a little bit of breathing room, but also know that we're kind of all in this together. And what we've done since then, which was kind of critical, is we've been at least once a week, if not twice a week, we've been sending all of our tenants. I have 2 guys in my office literally just going through every SBA, every CARES Act opportunity grant program, anything that could possibly be out there for the tenants. And we're putting together very detailed kind of handbooks for them to utilize to help them figure out help them get through this. And so we've been setting up 15-minute calls with every tenant for the last couple of weeks. And I'm taking the time to actually understand every single tenant's position, what they're doing. It's actually been incredibly insightful and in ways, I appreciate, the time that I've been able to spend towards this, because I'm really understanding each tenant, what they do, how their business operates. We're brainstorming with them, helping them get creative on ways to maybe maintain some revenue during this time period. And then we're also trying to just help them come up with a 90-day plan, saying, listen, we're giving you some breathing room. I need you guys to come up with a 90-day plan. What resources are you going to utilize? How are you going to kind of get through the next 90 days? And look, once you kind of have that plan, come back to me. If that entails me kind of helping you in some way, as long as it seems like, there's a good kind of plan in place, we're going to be more inclined to help those tenants going forward than tenants who just kind of put their hands out and ask for, help. So it's been a time consuming, but it's been very insightful for me. And our goal really is we want to come out of this with all of our tenants, being successful and hopefully going to be stronger coming out of this than having, half dark buildings, which is, not ideal for anyone.
And Steve, obviously kind of sitting there with 2 owners of real estate and you more on the transaction side, The goal is obviously for middle ground to be met between landlords and tenants, and tenant survival, is ultimately as important as real estate survival. How do you kind of, like, existing clients that you work with, existing landlords, what are the conversations that you're having right now, both in New York and even your colleagues from Cushman and Wakefield around the country, kind of to add, perspective or value to what everyone's faced with?
Yeah, I had a conference call with my international colleagues, my Beijing office, Seoul, Sydney, Australia, London, Paris, Milan. So the interesting thing about this crisis is it's happening to everyone, everywhere, relatively simultaneously. Obviously, it will impact different areas in different waves. That's the way the virus works. But for the most part, everybody's feeling the same kind of pain. And I think that that's one of the reasons why these landlord-tenant conversations are coming from such a place of mutual empathy. And I think Scott and Jared's points, their conversations with their tenants to date, illustrate that every landlord now understands and has understood the difficulties that retail tenants in particular are facing when they can't even be open. They're not doing anything wrong, and there's nothing that they can do to change the situation. There's nothing but bad choices. And I see the empathy going both ways, actually. Surprisingly, over the last couple of days, I've had conversations with retailers who've said, obviously, I can't pay the rent April 1st. I'm not open for business. I don't know when I will be open for business. The time frame is so unclear and so opaque, and the crystal ball is so cloudy. But I understand the landlord has mortgage payments to make, and I understand the landlord has to pay property taxes. And there's a sense of mutual empathy that wasn't necessarily there, 3 weeks ago when in New York City, at least, we were talking about commercial rent control or applying vacancy tax to landlords. There seems to be a real sense of, okay, I get it. It's a difficult time to be a landlord too, not just a retailer. And I think that's an interesting thing that's come out of this. So it really is a two-way mutual street of empathy. The flip side is, what other choices can people be making? I mean, to Jared's point, you can't evict, you can't default somebody. You're not going to kick anybody out, even if you could take them to court, which you can, for non-payment of rent. And then what are you left with? A vacant space in a very challenging market. So I think that almost every landlord recognizes that very difficult choice and realizes that they have no options but to partner with their tenants. And I think more than ever, and it was already starting to happen over the last couple of years in a difficult REIT market for landlords, that they were starting to partner with their tenants and empathize with their tenants and understand the top line and bottom line businesses of their individual tenants. That's going to happen even more than it already was over the next 6, 12, 18 months as we sort of slowly come out of this, because what has been made very apparent to me over the last week, that it's not likely to flip back on a switch where everybody runs outside.
Jared, we were talking the other day about some of your anchor tenants, and Steve mentioned F&B was, 50% of the marketplace for activity in New York in 2019. Let's just assume that tenants, find ways to survive, the government gets involved, and the stimulus package helps. How do you kind of look at a mixed use property that you have, or mixed tenant base where you have an F&B anchor or you have a high profile tenant, and what's the mindset working with kind of the best in class retailer to, like Scott's point, more of the mom and pop, and how do you prioritize when you put stuff back online, and how you look at the kind of the workouts of that situation?
So for the majority of our tenants, we have a personal relationship. That's one of the things that we always pride ourselves on as a differentiator between ourselves and some other landlords, is that you're dealing, for the most part, with myself or my partner, Bobby Carey, directly. We deal directly with the CEO, the head of real estate, and develop a personal relationship, not just a business relationship with our tenants. That's our goal usually. It always is our goal, actually. Just not, it doesn't always happen that way, but that's our goal. So when fielding these calls and inquiries, letters, emails, it all depends on the tone that the tenant's taking with us in terms of how we'll respond in terms of relief. We did not reach out to tenants, not all of our tenants automatically before receiving something from them, except for our restaurant tenants, because we knew right off the bat that they were going to be hurt by this, more so than retail. We've learned that, after the fact. So if a tenant comes to us, a restaurant, a retailer, and they are, humble about the need for relief and not just asking for a full abatement of rent for, 6 or 9 months, things that we find are irrational at this moment in time, we're trying to help them. We're trying to help everyone where we can at the end of the day, but it comes down to our relationship with them, how they acted prior to this in terms of paying their rent on time, being a good operator. So it's a case-by-case basis. And then you have some nationals that are just, also just deciding not to pay us, their landlord rent, when they're, instead of paying their landlord rent, they're paying down their convertible note, which, in some cases has a 4 or 5% interest rate, where our default interest and late payment fees are way above what they would be paying on a convertible note. So a lot of it is unexplainable, the decisions that some of these tenants are making, where they have credit lines. Like, why is the first their first defense measure for cash preservation to not pay their landlord? We don't have the ability to not pay our lender, or to not pay our real estate taxes, like I said before. But to get back to the real root of your question, yes, we have 2 huge restaurants in the meatpacking. It's essential to the neighborhood that the food and beverage is maintained after this crisis is brought back to life, because without that, the neighborhood is not, it doesn't differentiate itself from any other neighborhood. What makes the meatpacking interesting is the arts and culture and restaurant offerings. So we're hoping to come to amicable resolutions with both Catch and Pastis and any other food and beverage operation that we have an interest in the property. And that goes for all of our retailers, not just restaurants. It's about the relationship and how we deal with each other like human beings. If someone's not dealing with us fairly, we're not going to just, accept not being paid.
Got it. And Scott, you want to maybe touch on kind of where you see kind of the dust settling related to like types of industries that you think out of, COVID will, make sense to be similar to what they were before everything played out, or ones that you think will emerge, in terms of categories, tenant types, et cetera. Steve or Scott could weigh in on that.
Yeah, I mean, I think it's an interesting question and a tough question. When my partner Ben and I founded Tricera a little over 3 years ago, our whole real business plan was to focus on this kind of emerging retail in these kind of urban or neighborhoods that are kind of growing with a lot of millennials and multifamily around it, where we can create that experiential retail on the ground floor. So the whole our whole thesis was pretty spot on up until about 30 days ago. Is there's a lot more demand for food and beverage, for entertainment, for experiential boutique fitness, things like that, that have been thriving until recently. However, now a lot of those are also the most directly impacted because they're social focused uses, like restaurants that Jared was talking about. And so I think the big question that we're asking ourselves is, what is the new normal going to be coming out of this? I mean, I like to believe that, just by human nature, we have short-term memories. And I think, people are social by nature. So, at some point people are going to go back to, being social, going out, going to restaurants and doing all those things they were doing before. I just don't know when that's going to happen or how quickly. I mean, I just saw an article this morning that was talking about China, which is obviously a few months ahead of us, and how, you know, they've kind of come out of the worst of it and are reopening up businesses, but people have been slow to come out of their shells yet. So it's been taking a little bit longer. So, you know, I think preparing now, you know, for the next 2 to 3 months to get through the worst of it is critical. But I don't think, you know, 3 months from now it's going to be a slingshot where everything kind of comes back to normal. I think it's going to take time. So you really need to be prepared to kind of, you know, manage through this for more than just that near term kind of crisis. But, you know, just to kind of directly answer your question, where do I think, you know, what retail is going to be successful? I don't know. I mean, I hope it kind of comes back the way it was before to some extent. I believe, you know, I think office, you know, I know this is a retail focused conversation, but I think office is really interesting right now too, because I feel like there's been a social experiment going on where all these companies are now, everyone's working from home. And our companies are going to reevaluate their need for office space after this and maybe realize that they don't need as much space as they thought because people can work remotely. I don't know the answer to that either, but I think it's something we should all be asking ourselves, and how what is normal after this, I guess, is really what I'm saying.
And even the concept of an open bullpen versus a private office, the trend has obviously shifted away from private offices to open areas. Is that going to be, if they take the physical footprint, are they going to look for more offices now because the employees are going to want private space? Steve, what do you think about, all of us have been kind of, staying at home and respecting the quarantine, and I think there's like new relationships being formed between the consumer and brands, whether that be like how you feel about your supermarket or ordering online, or any feelings towards like how that may transcend in the coming months and years, kind of these new relationships that are being formed because people have more time to kind of consume things differently and live their life obviously very differently.
That's a really interesting question, and I tend towards Scott's thinking that we have short-term memories by nature, and I'm curious what the over/under is on when everybody forgets to keep washing their hands. My guess is in 3 or 4 years we've forgotten all about washing our hands, but I don't think we're going to forget who was open and who got us through this, and I think that there will be loyalty to brick and mortar businesses that maintain some sense of normalcy through this crisis, whether that's your grocery store, your bodega, your liquor store. There's going to be a sense of loyalty. And I think, coming out of this, the question is, will e-commerce be stronger? Will brick and mortar be stronger? We're going to be so pent up for social connection that is so hardwired in us as humans that it's going to be really challenging to not want to support your local business, to not want to experience things, to not want to be around other people. How that jives with being out when the virus is still out there and social distancing and the speed at which that happens is going to be a really interesting thing. But I do take a very long-term positive, optimistic view.
And Jared, do you kind of like, you're in different markets, big cities, like kind of looking at what the landscape was of tenants that you think were really pushing the envelope on catering to the new age customer, relating to like putting their brand in a physical space? Do you have any just like references for the audience on like who you saw as leaders in retail and obviously would be confident based on their approach that they could carry things forward after all, everything passes here?
Yeah, I think Hermes is a great example of a tenant that really got that the millennial shopper and being in a new neighborhood like the meatpacking district and creating a store that's a little different than the other stores and programming it with technology and doing more on social media than they would have done before. Is a company that's strong, has a ton of liquidity. You could follow their stock. It really hasn't been hit during this time. Then there's LVMH. I think there'll be some backlash against them because they're not paying any landlord. That's a huge conglomerate with tons of cash, a guy that owns it that's worth over $100 billion. I don't think that's great for their brand, that they're not paying landlords. I think there's restaurateurs that, have printed money for the last 10 to 20 years that fired all their employees as soon as this started, have not hired them back to my knowledge. And I think that could be terrible for their brand loyalty when that news gets out there. I think it's all how people are reacting and to what's unfolding here. In terms of like social media, there are bloggers that I'm familiar with, friends or peers of mine that are friends with them, that are acting like there's nothing bad going on in the world, and posting about their newest active wear and how special they are and frolicking in the Hamptons and whatever the hell they're doing. I'm out here, but you don't see me frolicking. I'm trying to work.
You're babysitting.
Yeah, pretty much.
Next to your crib.
So I think there'll be backlash against those bloggers, and I hope there is, actually, because I think it's a lot of them just the world is all about them, not about anybody else. So I think the brands that are conscious and care about people and others are gonna come out of this stronger than ever. I think, like Steven said, that people are gonna want to get together. Pessimistic a little bit about the short-term future, because I have spoken to plenty of retailers that do have shops. Their only shops that are open in the world are in China, and a few of them, have their best performing store in China would have been Shanghai, which wasn't that impacted by COVID except for the lockdowns. And when these stores reopened, they're down between 30 to 70% of their sales. A lot of them are talking about the impact that they're having by using the thermometer that I don't know if it's required or something that is just that a precautionary measure that the stores are taking themselves, but they're literally taking the temperature of every person before they come into the store. And I'm talking about large global chains. And keeping people distance in the stores. I think that same thing will likely happen here in the United States. And the other fear that I have that makes me pessimistic is, like Stephen and Scott said, I think they both said before, this is a global pandemic. It's not just here in New York or the United States. Every country is being impacted by this. So global spending will be down. The global supply chain is breaking down. So, it could be very, very challenging. Even if we come up with a vaccine in the next 6 to 12 months, I think, we'll be impacted for at least 18 months by this thing.
Yeah, and Scott, you're based in Miami and covering Florida as a market. Assuming everyone's respecting staying inside right now, how do you see kind of the customer base, and let's just use Miami as an example, reacting to what the future may look like? And also, I just want you to maybe touch on, have you started to hear like rumblings about how either retailers or retail developers, including yourself, are thinking about physical space in the future with, everyone's mindset obviously shifted from everything in the last 30 days. So physical improvements or changes to retail space going forward.
Yeah. So also just to kind of start at the beginning, look, as far as Miami goes, this is Miami. So people, until recently, honestly, were still walking around. You weren't seeing the social distancing that I was hoping to see people taking. In a lot of instances, people were taking this very lightly. And I think across the country, across the world, that happened in a lot of places too. It's just, lately, I think it's been better. Now I look out my window, I don't see as many people. 2 weeks ago, and I live on the water, I'm looking out my window and, there's just boats going by with 30 people partying on boats, thinking it's a holiday, it's spring break or whatever. Florida was late to close the beaches for spring break even. So, for the first few days of spring break, the beaches were packed. If you didn't see those videos, which was, embarrassing in some ways. But I think now, as, just like everywhere else, people are taking it seriously, and it's been, better. But, is it too late? Has it already, hit that point of no return? I don't know. But, one of the positives I've seen, again, not just in Miami, but like in Tampa, St. Pete, and a lot of markets we're in, is kind of, touching on what Jared said, where you see like, how some of the tenants have reacted and kind of showing their stripes a little bit. and people remember that coming out. I've really seen a lot of local businesses banding together via social media, cross-promoting, trying to get creative with how they can at least keep some sales to keep paying their employees and keep the lights on to kind of muscle through this. And I think those are the tenants that, getting through this will hopefully come out stronger. A lot of them are optimistic that when they come out of this, they'll be ready to grow. There'll be a lot of vacancies and hopefully better rent opportunities for them. So, there is some optimism. I agree it's going to take time. But, seeing how some of these local brands have really, been kind of banding together and I personally, I've been ordering a lot of local delivery for dinner at night, trying to support all the local tenants that I like and want to, help. So, I'm doing my part by eating, I guess you could say, but it's the truth. I'm trying to just, do the little things like that to help where I can. Although my wife is like very anti certain, cold foods versus hot foods right now and so forth. There's that whole debate too, is can you order a salad or sushi versus does it have to be hot? And I'm not a doctor, so I'm not going to tell you what to do or not to do. But it's interesting. I mean, going back to, I guess, the last question you asked, Jonathan, I mean, I think it's too soon to know how people are going to kind of think about their spaces going forward, how they're going to program them, if they're going to try to reconfigure. I think something that's really interesting, and this is the first I've heard about it, but I live in a condo, and our board actually made a decision this past week to basically install this 1 year lasting microbial disinfectant on all public surfaces. It's called something like Bacteria Shield 360 or something. I don't remember the name, but we put it on every single button, every surface in the community areas, on every elevator door. And so I don't know if there's any guarantee or proof that that's going to, kill any COVID, but, I wonder if now a lot of companies are going to implement that within all their stores and services, because apparently it does, last a year and it kills most bacteria on all surfaces immediately.
Yeah, Jared.
Yeah, I was just going to say, recently, anytime I go out now for an iced tea, a coffee, I have to buy a vitamin or get my medicine. I've been thinking about the point of sales area and having to pick up that wand and sign in, fill in your signature or grab the receipt from the guy. I think that's got to go. The applications like Square and other, a Venmo, a PayPal, I think there's going to be more of that happening, and like no more interaction with your hands on any type of material at the point of sale.
Right. Like even like Starbucks, with the online ordering, like the thought of, having something sit out there where other people are picking it up and touching it completely changes now. As a small example.
Forks. Totally.
Yeah. And Steve, what do you, like if you were working right now with one of your clients who has vacant space, I know everyone, as the conversations start in the coming weeks about what do you do, right? Like what are some of the creative ideas that you're thinking about, that you're hearing? Obviously, the big trend over the last few years was shorter term pop-up space, experiential. Do you see kind of a trend out there, regardless of what's happened, but also going forward, that will at least help soften the post COVID, environment?
Well, I think that there are going to be winners and losers out of this for sure. I can't even, I think there are going to be winners that we can't even imagine. I'm just thinking about organizing my apartment in the last 2 weeks and how badly I want to go to Container Store or Williams-Sonoma and Sur La Table because everybody's cooking at home. All these things that you're not even thinking about. Do I expect the wine and liquor business to continue to be really strong? Yeah. I think that that's a no-brainer winner. Who benefits from everybody wearing a mask for the next 6 months here in New York? We're already at 90% mask out in Manhattan right now, and the CDC is about to change their guidelines. Does that become a new social norm like it is in most of East Asia? There are going to be people that are really well positioned, retailers that are really well positioned out of this. And I think one of the ways to find out who that is to look at who's furloughing employees like Macy's, and who's paying their employees while they're closed, like Nike and Lululemon. And you look at those guys and you say, Okay, they have cash. And look, all this has to do with the last 10 years of a booming economy and the decisions that not just retailers, companies, airlines, whatever, made about their stockpiling and rainy day funds and cash flow and share buybacks and CEO compensation, and all that is likely to come home to roost, over the next couple of months. And we're going to be the companies that were conservative and made shrewd financial decisions with an expectation of a black swan event. Those guys are going to make it and be stronger than ever, because a lot of their competition will not make it through this.
And guys, we actually, I think we have about 15 more minutes, 15, 20 minutes. There's a couple of questions here that kind of to cater to the audience. I thought it'd be good just to maybe just quickly go through them. So somebody asked if any of you guys had any insight on the Los Angeles market, and particularly West Side Malibu. Jared, I know you've done stuff in LA. Steve, if you or Scott, if you feel like you want to weigh in there. If not, we could go to question 2.
Scott might be able to answer that. I just conversation with my colleagues in San Francisco and Los Angeles, the exact same concerns. They've been shut down even longer than we have in New York by a couple of days. There's almost zero differentiation between the situations we're in New York and LA and San Francisco.
Jared, anything there, or you want to?
The only asset that we had coming up available was when Barney's went bust, the Barney's flagship in Los Angeles, and we quickly executed a lease with Saks actually to reload there. So as long as Hudson Bay doesn't go belly up, we're okay for now.
Got it. And so someone kind of brought up that they're a VC-backed retail concept in LA. And they're kind of, speaking to, let's say, the smaller business audience, right? As a landlord today and going forward, do you kind of feel like landlords will be more willing to work with smaller tenants and help maybe roll out their stores within their portfolio or support them, as opposed to thinking about finding the optimal credit tenant in the future? So kind of talk about like perspective on a startup type VC-backed concept versus maybe a historical credit-esque. Jared?
I think there's going to be a proliferation of supply available after, in the next 2 to 3 months, and for the following probably year, that a landlord that was unwilling to deal with a VC-backed company before will certainly change their tune. We've always been interested in these VC-backed companies. They might not have the credit, but they, for the most part, are more entrepreneurial and creative and add a different mix. You don't have, the same tenant. This tenant might be their only shop in the country, if not the only shop in the world at the time. So to take a shot with them is adding, some creativity to a neighborhood. But yeah, I think rents come down hard and there's a lot more supply.
Yeah, I'll just, these are exactly the types of profile of tenants that we like to work with, and I think are going to have a lot of opportunity coming out of this. One of the things we've always been saying before this, even the COVID situation happened, is in our markets, we're really more focused on betting on operators and not necessarily looking for the best credit. We'd rather merchandise with the concepts we think will all, work well together and be successful, whether it's their first location or fourth, rather than just put it in a bank and a 7-Eleven and call it a day. So, I think there's definitely an opportunity coming out of this for any concepts who I think are able to come out stronger and really kind of separate themselves from a lot of other operators who are obviously going to hope, unfortunately, fall by the wayside through this. I think those are the operators we want to start talking to and help expand, because they obviously were able to weather the storm and come out stronger.
Yeah, and are there actually, like in April, going into April, are there tenants in the marketplace? Have you had any inbound calls for people that are talking about leasing space today? So is there any new business?
Jared's shaking his head no. I think I said at the beginning of this, I had about 20 leases in motion before this started. Every single lease is on pause except for 2, which is interesting, actually. This is interesting. We have 2 leases that are actively in negotiation and allegedly are going to be getting signed next week. One is with Starbucks, so Starbucks is still signing leases, we're being told. They haven't signed our lease yet, but they're telling us they are. And then one is a national grocer. So obviously those are kind of the exceptions right now, I would probably say, but the only 2 deals that are actually advancing right now are those. All the other ones, everyone's kind of pausing and just want to, take 30 days and see where this goes.
I could give you a quick,
Yeah.
a quick story. So we have 2 huge, 2 really large office leases that have been out and have been being negotiated for a couple of months. Both went into COVID looking like they were, weeks away from execution. One recently just said they're on pause and they're not looking to move forward at this time. But, once this calms down and things return to some type of normalcy, they'll come back to us and we'll pick up the lease and see, what retrade they have for us at that time. Another already retraded us, and they want this may become more prevalent in deals going forward at this moment in time. So not only do they have, tolling of dates based on the pandemic, they have different rights in the leases based on future potential stoppages of, store closures or stoppages of work, which is more attuned to this conversation because it's an office deal. They're also tying their base year rent. So whatever we had agreed to, they're, notching it down by, let's say, 10%. And then they're looking for some type of correlation to an instrument. So we're tying it to the S&P 500. So if the S&P 500 12 months from the date of lease execution is down 20% or up 20%, there's a rent reset in the rent, but there's a floor and a ceiling as well. Actually, the ceiling is the rent that we were supposed to be getting going into this thing. And the floor is about a 20% discount on the already discounted rent that they proposed. In terms of retail, we do have a couple of retail deals and going full steam ahead, it seems like, in the meatpacking district. And I can only attribute that to the fact that both companies are extremely well capitalized. One is a Fortune 100 company. The other is a company, a startup actually, that has like $1 billion in cash. And if they don't open up their stores, their physical stores, they're going to have to forfeit the investment dollars that they already raised. So I think those 2 have a potential of getting done. In terms of inbound calls from new potential deals, there hasn't been one in 3 weeks since this started. Not one.
Yeah, I was just going to jump in and say I agree with everything Jared and Scott said. The only deals that we're still working on at the moment are CVS transactions, Trader Joe's deals, and a Starbucks lease in a public transportation facility. So for the most part, leasing velocity has ground to a halt. But the retailers that are doing well and open for business, it's business as usual for the most part. They're going to be able to drive great deals at this point. It's a tenant's market more than it's ever been, obviously.
Mm-hmm. Got it. And anything that you guys are doing, like on the physical front or operationally, like when stores are closed, to kind of prepare for the month, 2 months, 3 months out when some of these guys, reopen again? Is that an exercise that you're going through right now? Just prepping and being side by side, in addition to all the financial stuff and the lease situation. But
at Aurora, we're not doing anything in particular on the physical level. We had been moving full steam ahead with all of our construction development projects, but now the Department of Buildings in Manhattan is shut down, so we can't even do completely.
And to that point, Jared, do you think, if somebody has like a not insanely complicated build out, do you feel like there will be maybe even a new mindset on how to retrofit a space? Because if they needed to open up, let's say for April, now they're pushed back. I know there's a big creative and innovation community through PSFK. Is there anything that you think could be helpful to the tenant community and or landlord to get a store open to kind of rethink?
Sure.
Yeah.
If there was a way to have retrofit fixturing and sheetrock walls that are not sheetrock, I don't know. I'm just thinking of like the few components that go into a store's build out that can help them open up and shut down in a more timely manner. That's always helpful. But what I was finishing saying is that unfortunately we're stopped. All of our work is stopped throughout Manhattan at this moment in time, and we can't even file for new development or alterations to a building because the Department of Buildings is shut down. What we are planning on working on over the next 30 days is fine-tuning marketing materials for projects that are upcoming or spaces that are available or we know will become available. So we're using this time to to get ready for the other end.
Yeah, in Florida, just to jump in Florida, we haven't been shut down. So construction's still moving. I've spoken to a handful of tenants that are in build out right now over the last few days. They're all full steam ahead. I even got a TI draw request this morning from one tenant. So the tenants, as long as they can still keep building, they are still going, which is, I think is a positive thing. They're not just kind of sitting on their hands waiting and then asking us for additional free rent at this period of time. They want to get their build outs done and be ready to open once this kind of passes. And then we're doing some renovation construction on a couple buildings, and one of them in particular, we were going to have to do some facade awning work that was going to impact the ground floor retail tenant. And so we actually, say hi to your son. We actually had some. We actually shifted around the scheduling of how we were doing some of the work, because since the ground floor tenant's actually a bar, so they legally cannot open for 30 days. We said, let's take this opportunity to do all that facade and awning work now, so we don't interrupt their business. So we actually have taken advantage of this in a way to kind of change around our scheduling to do this while the tenants aren't open.
Yeah. And Steve, in terms of having a access to a nation and worldwide, fellow colleague environment with all of your Cushman Wakefield people, do you feel like any markets that you could think of, obviously there was the Austin and the Nashville and these secondary markets, and now have become, quasi gateway mini markets, anywhere that you think will, any part of the country, any sub-markets that you think will kind of become, more popular from a retailer perspective, from a retail investment perspective in the coming years?
I mean, that really goes to a bigger question I don't know the answer to, is does this put a halt or a slowdown on the urbanization of America? I don't think it will. And again, goes to Scott's point that we as humans have generally short-term memories as it relates to these sort of things. I think that will continue unabated, that this will, in a 10-year window, be a brief lull. And I'm fully expecting New York City and every other major metropolitan area that gets really whacked by this over the next 9, 12, 18 months, whatever it is, to be back online and better than ever in a couple of years, less than a couple of years, 2 years. I think everybody's being hit by this the same way, and there is geographic equality to this virus, and I think everybody's feeling the exact same way, whether they're in Nashville or Austin or New York or Wichita. And I think that's one of the reasons why there is a sense of community and a sense of we're all in this together. And even though, New York right now is getting the worst of it, it's clear that that's going to be a rolling thing, and other cities will feel it as well, and other towns, geographic areas. And I think that's driving this sort of mutual empathy that you're seeing in even landlord-tenant relationships.
So I think, guys, we're gonna try and wrap up. So maybe if there's any final thoughts or words, feel free to share them. If not, or if anyone has any questions, a final question, we have, I think, like 4 or 5 more minutes. So you could either go into the Q&A on the bottom, or if you guys want to if there's anything you want to say. If not, we can wrap up.
I see someone asked about acquisitions.
Yep, please.
If anyone on the panel is looking for acquisitions, I think the answer is everyone is always looking for opportunities to buy good valued properties in great locations at the right prices. The problem I think right now is the market for financing, the financial, the capital markets are a little bit frozen. The spreads have widened dramatically. We're finding it difficult to close construction financing, even our refinancing proceeds, quotes that we had and binding term sheets. The amount of proceeds have been diminished. The spreads have widened. So it's hard to buy right now. And what do you pro forma in terms of rents if it's not a stabilized asset? What are retail rents going to look like 12 to 24 months down the road? What are office rents going to look like? I'm optimistic like Steven in terms of the urbanization continuing, but from friends that I've spoken to, many, a lot of people are like, the first thing they did when this hit was run the hell out of Manhattan or Brooklyn or Queens. They did not want, if they had the means to be in a larger space with fresh air outside of those urban areas, they did. And I think a lot of 40 plus or even 35 plus year olds with families are realizing that there's a quality of life, major quality of life difference when you're not in a small box. So if you can withstand commuting, and your job is in, the city, maybe it's time to really consider moving outside of Manhattan, which would not be great for the city, obviously.
Scott?
Yeah, I'd say
Thanks,
just
Jared.
on that point, just to kind of echo Jared's. I mean, like, I know Jared, just like me, we're both deal junkies, so we can't help ourselves, but we'll just be kind of looking for new opportunities. But I think they've got to be really opportunistic right now. I'm saying right now I'm playing 90% defense. We're not out there trying to, comb through new deals and spend a lot of energy on that right now, unless it's an extremely, enticing situation. I had 3 deals that we were about to go into contract on about 3 weeks ago that I just hit the pause button on. So all 3 of those deals, we just said, let's wait. I don't want to tie you up and then have to retrade you or ask for more time in 30 days or 60 days. I said, let's just wait and let's assess, and we'll keep talking. And they all appreciated that. They said, we get it. Let's just keep the dialogue. And every few weeks we just touch base. And, as of now, we're still not signing those deals, but we're keeping the dialogue. And I guess, just the last thing I'll leave everyone with is, look, we're all in this together. This is a global situation and we're all going to get out of it together. I think it's really everyone kind of, everyone's going to feel the pain a little, but everyone has to help. And I think that's really, the way I feel about it.
I want to say one more thing regarding acquisitions. If you look at the equity markets in terms of REITs, you have Vornado here. I'll just check. I'm not going to look at my phone. It takes too long to log back in. But basically, it was trading, I think, around $33 the last that I looked. That would price Vornado's equity, all of their real estate at like an 11 or a 12 cap. And you're talking about some of the most premier office and retail buildings in Manhattan. SL Green is probably trading at a similar cap rate or book value. They're all getting crushed right now. So, the smart money is that things are going to get worse before they get better, unfortunately.
Steve, and then we're going to wrap up. Jeff,
No, I was just going to say, Jared's 100% right. You look at SL Green's market cap today, and it's $3 billion or $4 billion, and you feel like they have one building under development at One Vanderbilt that could probably be worth that much, or will be. So, I agree that in the short and medium term, things look bleak, but it's really hard to look beyond a 12 or 18-month time period, given the trajectory of this virus, given the possibility of a vaccine, given herd immunity, given all the things that we know about epidemiology or whatever, and not feel confident that we can get back to where we were literally 30 days ago, after we beat this thing. So that's the kind of viewpoint I have. Time will tell if I'm wrong, but I hope I'm right.
Anyone that agrees with Steven should be buying some of these stocks, and I'm a believer too, by the way. At these levels.
This is not a stock center here, but yes, that's good feedback and input. And guys,
Charles Schwab.
Right, exactly. But guys, thank you so much for making yourselves available. I think it was a great discussion. Obviously, everyone's information is on the PSFK site. If anybody from the attendee list wants to talk further, I'm sure everyone here would be willing to field any innovative, interesting real estate and non-real estate stuff. Jeff, are you going to shut down? Okay.
I am indeed. Thank you all for participating. Jonathan, if you want to share an email, feel free to, no pressure. If you want people to send you a note if they have extra questions, you can.
Yeah, it's jon@bizydev.com, BIZYDEV.